Be sure to watch my TED Talk on londonreal.tv. All right, guys.
Let's do this.
Podcast. Here we go, guys. Let's do this. This is Silicon Reel, the video podcast dedicated to the people of the London technology startup scene. I am Brian Rose. I also host London Reel, which is a similar three-person trialogue format. We just had Bruce Perry from the BBC series Tribe on here last week. He was talking about jungles and drinking ayahuasca and all sorts of crazy stuff. We've had Tim Ferriss from the 4 Hour Work Week. We had drug smuggler Howard Marks sitting in that chair, Carlos. So you're in good company. But today we're talking about Silicon Reel. My co-host today is my man, Mr. Bryce Keane.
G'day.
Founder and director of All Beyond Drive. He is also a member and co-founder of the Three Beards.
Indeed.
It's a good-looking beard. I'm not going to say it's the best beard.
It's all the best beard.
But
there's three of us.
Yeah, you all have equally best beards. If you don't know the Three Beards, they run the weekly Silicon Drinkabout, which is usually right near this very office in the Silicon Roundabout. It's free, it's fun, it's casual. You can show up and have a good conversation. So those are always awesome. You also have your digital sizzles, which are quarterly.
Yep.
Don't Pitch Me Bros, which are monthly. And Chew the Fat number 3 is coming up next month, right?
Yes, it is mid-November.
Okay, everyone's saying great things about Chew the Fat. So awesome, man. Thanks for being here.
Thanks for having me back. It's good to be back.
Cool, dude. Our guest today is Mr. Carlos Eduardo Espinal, who is a partner at Seedcamp.
Sexy name.
That is a good name. Which is Seedcamp is Europe's leading micro-seed investment and mentoring program, as far as I understand. You started in 2007, and you now include over 90, I think, of Europe's most promising startups. I think your standard investment is 50,000 euros or pounds for about 8 to 10% of a company. Is that about right?
About right.
And you sign about 20 new startups every year?
It's about right, yeah.
About right. Okay, cool. I do a little bit of research. So before that, you were a venture capitalist, and then before that, you were an engineer, I think working for New York Stock Exchange Euronext.
That's right, yeah.
It's quite a history. Welcome to Silicon Reel. Thanks for being here, Carlos.
Thank you.
Awesome, man. You know, I'm curious if you guys are familiar with the term OG. Have you heard of this? It's a term in the hood.
If you put an M in it, I'm...
MOG?
OMG?
OMG.
No,
That's not good. OG is a term in the hood for original gangster. It's like a term of respect shown to like the guys back in the day,
Yeah.
the gangbangers that made it all happen. And, I thought of that when I thought of Seedcamp. These guys have been here since 07. That's a long time, That's back in the day when the Roundabout probably had, tumbleweeds and gunfights and stuff. And so I wanted to ask, Carlos.
Is that the first time you've been referred to as original gangster, Carlos?
I'm Latin American, called a gangster. It's got other repercussions.
Yeah,
Okay, fair enough.
There could be some lawsuits.
I love that. I love that.
Lawsuit. But we hear incubation and acceleration. We've had lots of people through here, but we haven't had a lot of people that have been doing this for 6 years. So I was wondering if you could tell us, from what you've seen over the last 6 years, what's the state of the union when it comes to seed investing in London? How has it changed, and what's going on right now?
Yeah, no, it's a good question. The evolution of all of this. And there's actually two evolutions if you want to talk about them. There's one is kind of the overall ecosystem. Another one is of stuff like what Seedcamp is, right? Because people sometimes throw this term accelerator or incubator, and they kind of use them interchangeably, but they're actually not the same thing. And the incubator wave had its roots, in the late 90s. And that's a whole different thing we can talk about if you want.
Yes, I would like to do that, because we do lump them together all the time. And I don't think, especially newbies like myself, we don't know the exact differences.
But then sort of your original question was sort of in 2007, what was things like? And, if you look back at the cost of starting a startup back in, let's say, early 2000s, it was really high, right? You had to buy your own infrastructure, your own hardware. You had a huge amount of sort of build before you can even test it, put it out there. And you could argue that economy of scale of the cloud services coming online late 2007 and 2006, you really started having the context in which you could have these startups test things out, see if there's a customer base, and then scale it if there is one. And on that basis, you started having a whole bunch of startups popping up that just didn't have the capital to make it happen. And that's kind of where Seedcamp was born. So here, there was a lot of, obviously there were investors, and they were looking for deals, and there were deals to be had, but they tended to gravitate towards the more established kind of company that already had some level of traction, that already had some level of monetization. There was a clear business plan and a business strategy. There wasn't that much of like, I have an awesome idea, I can bang it out, put it together, and test out whether or not customers really want it, and then look for a certain amount of money just to get me to that next phase. That didn't exist. And so in 2007, Reshma and Saul had this sort of idea of, well, let's bring together all the investors from the community and provide that support in the way of a seed camp. And it was a one-off event a year at that time. It was just designed to bring everybody into the room. So like the original one had pretty much the entire ecosystem show up. And it was around basically, how do we support these young guys that want to have some cash to like test it out, see how it goes. And it's amazing to see kind of how those companies are different from the ones that are today. You know, they were really the pioneers because they were testing things out very lean, before lean was cool.
Right.
And they were testing these things out with very low cash and getting it to the market and sometimes before their time. If you look at one of our companies that we sold recently, it was called Rent Mine Online. We sold it to RealPage. It was collaborative consumption before collaborative consumption was cool. You know, the Airbnb made that cool. But it was like stuff that didn't exist, but we enabled it to happen. So I wouldn't say it was like the wild, wild west. It's just the cost basis globally to build a startup on the cheap or cheap-ish was just not possible technologically until that time started coming around. And then from that point onwards, Seedcamp was, whereas in the US you had YC and maybe a few other organizations that were doing this in every state maybe to some extent, we were the only ones in Europe, which obviously is indicative of maybe the state of things in those days. And then, then we helped scale that. Then of course, Seedcamp has evolved over the years and we've had, you know, we've gone from 1 event a year to 12 events a year to, you know, I think this year we've done probably going to hit 20 or so. And in each one of those, you know, we meet tons of new companies. We get about 2,000 plus applicants a year, 200 which we'll meet in person, and about 20 or 30 that we'll invest in. So that just kind of gives you a feeling for that evolution, but the origins back in 2007.
Okay. And can you just set the record straight for the difference between an incubator and an accelerator? And maybe that definition has changed over time too.
Yeah. So the original idea behind an incubator, like in the late 90s, was like, let's create a co-working space of sorts, and I'm going to provide you some assets around that. And the subtlety of to why there was this implosion of incubators back then was really clarified for me recently when I was at the Turing Festival in Scotland, and somebody gave, I forget who it was, but basically had studied why the failure of the startups in incubators. And it turned out that it had to do with a psychological issue, which was that you tend to gravitate towards staying within a close-knit group, especially when you're going through a lot of stress. And what was happening was that incubators were creating a nest where nobody had to leave. And that nest allowed for companies to necessarily expand out of that nest. So they gravitated towards staying in that nest because it was a comfortable environment. You had your friends, you had the water cooler, you'd have conversation. And it was a study that he had done of a lot of the cases of startups during that period. The accelerator is a slightly different beast in the sense that it is designed to literally get you out of the nest.
Right. Okay.
And so, yes, there is a period when you are, in effect, incubated, but it's only for a very short period of time. But the intent isn't to keep you there indefinitely. The intent isn't to provide a nest, a warm place for you to stay indefinitely. The point is to get you out, to grow, to scale, to push the limits, to learn everything you need to learn to scale your company, to get you to product market fit and push you out. And so that's kind of what we focus on. And there is then probably a fracturing of what the term accelerator means these days, because there's a lot of people that call themselves accelerator, and then maybe they're more of an incubator and stuff. But that's probably the closest you can come to the differentiation between incubator and accelerator.
Is there a time limit roughly that makes an accelerator? Is it like, so people that don't know, is it 3 months? Is it 6 months that would make something more of an accelerator than an incubator?
Yeah, I think if you look at a lot of the cross-section of accelerator programs, for some odd reason, 3 months seems to be that happy number.
Okay. Which isn't a lot of time.
It isn't, no. It is enough to like sort of know what you need to know and maybe do a few potential key hires before you go and venture out on your own.
Okay.
Our program's structured a little differently than that, but the dynamics of it tend to reflect that, which is there is a substantial amount of growth that happens beyond month 3, and usually it involves, one of them is expansion outside of the environment that we provide.
You mentioned the implosion, the great incubator implosion. I wasn't familiar with this. Was there a certain kind of time frame as far as in London where we saw kind of that market implode?
You know what? I wish I could give you the names, and I should have maybe come with a list if I had known that I was going to go through it with you. But yeah, there was probably a few names that you might have heard of, and
what kind of time period? Like 09 and 10, or like 05, or
no, like in the late 90s,
Okay.
early 2000s. There was. I'm trying to remember the names right now. Maybe it'll come to me later. But it was like a few sort of co-working / incubator spaces that just nothing really notable came out of them, and they just seemed to go away.
Okay. So when you created Seedcamp, you were well aware of that phenomenon.
Yeah, I mean, it's something that the thing is, remember, Seedcamp didn't start on the basis of this is an accelerator. It wasn't like, sometimes people in hindsight will attribute a certain thing to the origins, but Seedcamp started as a way to provide capital and advice and validation and sort of mentoring to startups. There was no venue for 2007, 2008, 2009, 2010. We had no venue. There was no space. Seedcamp did not have a space for the startups.
Okay.
It was
but
entirely.
But you made investments.
We made investments.
Okay, but no
we
space.
gave mentoring. We gave advice. Like there was the concept of the acceleration was there, and most of the acceleration happened relatively early in the life of a company, but the real estate wasn't there. So I mean, that just goes to prove the point of the differentiation between like a real estate play versus a sort of know-how play. Like
Right.
what I would say highly differentiates an accelerator is this is about the know-how. This is about getting you the right commercial resources, the right mental mindset resources to get you to where you need to get to, rather than providing a nice space for you. And that's a bonus. It's just that's not the objective.
Okay, understood. There's one thing we always ask everyone that sits down, whether they be a startup guy or a VC guy. It's just like basically to get an idea of your business model. But we always ask, like, what have you done and what are you going to do, and why will Seedcamp win in this space? Like you said, a lot of people. It's quite trendy these days for even these huge corporations to start their accelerator programs. I mean, we just had Devonshire in here from Wayra Telefonica. We just had Roxanne Varza in here from Microsoft BizSpark. Everyone's getting into this, right? But you guys have been out there early. But what makes Seedcamp different, and why will you win in this space?
Yeah, it's a good question, and actually, it's a question that I think is increasingly important. But it's also one that seems to gravitate outside of proxies of other industries and how they have evolved. So let's play with the VC industry, right? There was the initial funds that sort of existed first, the Sequoias of the world. And then there was all the funds that exist today, which some of them are the first in a geography. Some of them are the first in a sector. Like you might say, this fund is well known for financial technologies. Like Anthem, for example, might be known for financial investments in Europe. So when you have that kind of differentiation that starts occurring in any kind of evolving ecosystem, the question is, where is that you plan on being in that ecosystem? What is the role that you intend on having? And so Seedcamp has always been about finding the best founders and backing the best founders. It will always be about finding the best founders and backing the best founders. Does that mean that sometimes we'll invest in a healthcare company or a financial services company? Yeah, probably, right? My future is to find the best founders and back the best founders and provide them the support to get to where they need to get. That's it. Other programs will start probably sort of going from a different angle, which is they specialize in software as a service, or they might specialize in Internet of Things, or might specialize in healthcare. And in many ways, like the support that they will be able to offer in that will be no different than the way that the VC funds have specialized, right? You have VC funds that specialize in certain industrial sectors or in pharma or whatever. And the evolution of the market as a whole will be around founders choosing what they feel like they need the most. In some cases, you want to have access to the network that Seedcamp has. We have 104 startups now. That provides a valuable alumni base of people that have experience and can help you far more than sometimes outside parties can. So if you look at the evolution of that, you as a founder will be like, what do I want? have now the luxury, because of all the programs that are out there, to pick and choose and say, well, look, my choices are, I either want to go to Seedcamp, or I want to go to this other program that specializes in the sector that I'm applying to, and maybe in other proxies universities, right? We all know that the universities have a ranking, and there's a Harvard, and there's a Stanford, and there's a Yale, whatever, and those schools, people will apply to that, or they'll apply to, let's say, the best engineering school for mechanical engineering, and whichever one they'll get into, based upon what they need, they'll go to that. So that's kind of how I see us, the whole ecosystem evolving. But in terms of us, definitely pushing for promoting and helping and finding and supporting the best founders.
Okay. Bryce, you've been in this space a lot longer than I have.
Yep.
When you hear the word Seedcamp, like, what are the things that you think of right away, that differentiates them from the rest of the crew?
So for me, it's always been about, and I don't know, this might not be true, but the word on the street, what the kids are saying.
That's what I want to hear,
What the
man.
kids are saying. Take a step back.
Are you a kid anymore? Not really.
Not with this beard. I scare kids with this beard. That's what I do. What there is Seedcamp is always kind of, I think, is always quite associated with being the first of this, the first people to be around and invest in what I kind of call the new wave of startup culture in London. So after the original .com crash and the original ideas went out, it wasn't until around 2007, that was about when what we are now here talking about began to really emerge. And that was when some of those bigger companies, the companies that are still around today, that the Huddles and the Mindcanes, Moo, those sorts of companies started to emerge. And Seedcamp was always was the original program, I suppose, before anyone was willing to do that early stage investment piece. I was always curious, actually. I never asked this, but Reshma, who's the founder of Seedcamp, so Seedcamp started by Reshma and Saul Klein, who's from Index Ventures.
Right.
And I'm sure we'll have Saul in here at some point soon. We'll have to organise that. But how did they meet, and where did the idea come from? Now, Saul's Index obviously is a VC, and he does a lot of early stage seed investments as a VC. And I was always curious about how they met.
Yeah.
And where the idea came from, because he's got a fairly hefty black book, it might be fair to say. So I suspect he pulled in a lot of what was happening in that ecosystem in the beginning to do Seedcamp.
Yeah, it's a good question. If you look at the evolution of any industry's sort of peer groups, Reshma and I are in the same peer group, meaning we were both kind of in our same stage of our careers. And Reshma was working at 3i and I was working at Doughty Hanson. And Reshma had a conversation with Saul in the context of when she was at 3i around how to help this. So it was an idea that Saul had in a conversation with Reshma. And basically the two of them worked together to organize that. Obviously, whenever you have 2 or 3 different people, different age groups, and different sort of cohort of friends, you can organize across that. So I was involved early on as a mentor, because obviously being a friend with Reshma, and she knew me, and obviously Sitar Telly, and that's kind of our vintage, if you want to think of it. But we all knew each other, and obviously we all wanted to support the initiative. And obviously Saul had a lot of his peers and cohorts in the same sort of initiative and trying to bring that together. So that's kind of how the two of them collaborated and then brought the whole ecosystem together.
Which is really interesting, actually, because it is one of those ones that a lot of the sort of what we would now sort of refer to as the notable founders have been involved in some way, either as companies or as mentors in the program. It does have that pedigree, I think is the right word, because it was the first thing, and it was the first thing where they said, we need the community to get involved in this initiative. It's not just about us investing in companies, it's about all of you guys giving something back, which was, at the time, I think there wasn't really anyone else doing it at the time. Am I right?
No, there wasn't anything like that.
No. It's like I said, OG, basically.
OG,
Original Gangsters. Well, I will have Saul on at some point. It's definitely an invite out to him. We have a section of the show where it's like we usually hit some devil's advocate questions. So I'm going to hit you with a real question. When can incubation hurt a company? I mean, have you ever looked back at your history and you're like, yeah, we really screwed that up? As in, like, it would have been better. Accelerator. As if it would have been better if they would have missed us, or would have been better if they did something else. I'm just curious if you've seen that.
Yeah, look, having worked with 104 companies, there's a lot of things you see. And one of the things that I've seen, and it hasn't happened very often, but is sometimes you can accelerate something that isn't quite there. Sometimes there is this drive when you're in a program that you just want to perform, and you might go down a particular path as fast as you can without taking a step back. Now, we have learned from those experiences. So a lot of what the Seedcamp program is today is already, it sort of has a certain set of checks and balances so that nobody finds themselves. But in a few instances earlier on in sort of the Seedcamps learning process, because in a way we're a startup as well, and we're iterating and learning from our customers, and the founders are our customers, and they tell us, hey, look, going down this path of like building out my, in this case, it was that they were really pushing hard on getting adoption from a specific user group, but they had a high cost of acquisition for that user group. They were going down that path in hopes to get traction, but frankly, they hadn't thought through the entire process of whether it was a scalable cost of acquisition process. And so we've now sort of amended how it is that we introduce certain topics so that the teams have a feeling for, actually, wait a second, is this a scalable process that I can test out? Because you're not going to go and build it just monolithically before you've had any kind of validation. But at the same time, not running towards a wall and hitting it and then finding yourself out of cash and being like, wait a second, what happened there? Yes, I received all this great advice from all these people, but I implemented it on something that I had yet to really test out and validate. And a lot of this stuff, like you look at the evolution of the ecosystem over the last 6-7 years, there's a lot of know-how that's been put into it in the last 3. Just from a lot of people taking that learnings from the first 3 and then sort of quantifying it, putting a framework around it, writing books on it and stuff like that. And that's also helped quite a bit. So yeah, there's definitely moments like that where you're like, well, it's hard to accelerate something that isn't quite there yet.
Right. I was looking through your blog, and it seems like you really fine-tuned this. It seems like you really want to get the company to think about like exactly how they're providing value to the customer. Because like if you can't provide that, then you can't quantify that and scale that. As opposed to someone coming in that's like, I'm going to make a ton of money, or we're going to do what those guys are doing but better. It seems like the more you get down to like the spirit of what you're building, the more success rate you have. Is that right? Or is it not that simple?
No, I mean, obviously, look, it's never simple, right? There's always tons of things that throw off. Like you could be going down really well, then all of a sudden your developer quits. I mean, there's all sorts of things that happen. It's always a very fluid situation. But if you don't have clear in your mind who your customer is, and therefore what it is that you're building and how you're communicating to that customer, what it is that you've built, then clearly you're going to go sideways. As an example, I think early on, sometimes startups get traction from 2-3 different types of customer segments, and they might be not confused, is not the right word, but you're tempted. You're tempted to go after 2 or 3 different things because you're hedging your bets, right? But if you look at most things that deliver value, it's like you kind of have to put a certain level of momentum behind the one that you truly believe, because otherwise you're wasting resources on things that might not necessarily go anywhere. And so, I remember one case where companies they were doing that. They were kind of going through 2 or 3 different things all at the same time, and inefficiently so, versus sort of going after one group of customers that they really truly understand, that were really passionate about what they were doing, and that you could really build something for that user group rather than trying to be everything for everyone.
Right. Put all your eggs in one basket. That's what you guys want them to do, right?
Basically, you have to be something for someone. That's putting eggs on baskets, I guess, one way of looking at it, but it basically have to be something for someone versus everything for everyone. You just can't do that with limited resources.
Okay. Bryce, you've had experience seeing, companies accelerated and incubated over the years. I mean, what question do you have as far as the process or what goes on in there? Actually, I was thinking about like the 50,000 pounds or euros. If you had to go back and do all the accounting on like where that money went for each company, I mean, if you had to roughly break it down by thirds or something, I'm curious what it goes to, because it's not to space or salaries or everything.
I've wondered about this because you think about like, say in London, and most of these companies average teams of maybe 2 to 4, average being 3, I would say, usually. On the sort of, when you go into the accelerator program, usually 3 or 4. It's like, that's not gonna go very far. Like that that's not a lot of money. It's like one person's salary.
So where does it? What does it go? Usually, I mean.
So I'll answer that question but I'll comment on something you said earlier, which is around sort of the blog pieces that I've written. Each blog piece that I've written has been a function of certain stories or certain things that have happened and that I've witnessed, and therefore these blog posts are designed to avoid those things in the future. Mistakes cost money. So therefore, making that money go further involves you making less mistakes. And then there's certain kinds of mistakes that are totally normal as part of the company's evolution, right? Is this customer segment interested? Is this not? Is this marketing channel appropriate, or is this one? All those things are kind of normal. What's not normal is, did you have to pay a ridiculously high legal fee because you screwed up the way that you set up your company? Like that's why some of the blog posts I've written have been around that. So assume for a second that you get everything in terms of company formation, founder agreements, and all that kind of stuff set up right. Then all you're doing is focusing money on building out a team or maintaining a team until you can get your next round of financing. So the 50,000 euros is really designed mostly in getting that market traction, that product market fit required to go and raise an additional round of capital. It's not designed to hold you off for like another year or so. Obviously, if you're just one guy, it goes further than if you're four guys. But increasingly, founders are telling us that it's not really about the money as much as it is about the mentoring and the advice and the network. So the money definitely is a factor for some. 50,000 euros definitely can help for several companies that maybe it's a young founding team and they need to move to London and they need to like do a lot of sort of setup costs. But we do provide them with some space at our offices. We also have a 150,000 euro founders pack, which we offer to companies, so that reduces their cash burn as well. That includes stuff like accounting services, legal services, hosting services. So the net effect is you're basically using 50,000 for living expenses.
Really? Okay. So that goes to salaries, really, and living.
The program
Food.
itself is designed to try to reduce the amount of costs and then provide you with services that further reduce your operational costs. And then you're left with, food, lodging.
So it doesn't go into customer acquisition, or it doesn't go into
like
a developer or coding or marketing or any of that stuff.
It could. Some of it could, right? I mean, it's up to them how they choose to use it. But the objective is that hopefully with a lot of the packages that we have within our Founders Pack, that a lot of that could be offset by that.
So the Founders Pack is an additional $150,000 of value you give them through agreements you have with other service companies.
That's right, yeah.
Okay, so it's more than just the 50.
Yeah.
Because that seems like it would go quick.
Yeah. That's interesting. Is that? I didn't know that actually that you had the extra packages. Was that widely known?
Yeah, it's on our website. I think we also have a few listings of the people that provide us stuff. I mean, we have some great partners that provide us, like I'll give you an example, like Rackspace, like hosting, that kind of stuff where you'll, Amazon, where you're gonna have to use that. You're gonna have to pay some Amazon web credits at some point. So it's great if you get sponsorship there. So it's great for the companies not to have to use that money to test out, for example, other forms of customer acquisition, rather than worrying about necessarily covering certain sort of fundamental costs of operation.
Okay. I'm curious if you could just walk me through like two scenarios. Like if a company, say, just signed with you and you're going to accelerate them for the next 3 months, like what would be the most ideal way to part company, and what would be like the worst way to part company? Like what's like the dream scenario, and then like what's the worst thing that happens? As in like you have to call the police to get them out of your space, or what are those two extremes? Because like I don't know
they
these
show up
things.
at your house in the middle of the night, tucking you into bed.
Yeah. I mean, look, the best one is the easy one, right? Like we've had some companies that are doing amazingly well, and then they get backed by a seed investor or angel or VC within a month or 2 months, and then they'll go and they'll scale their team, whether it's in a different office here in the Roundabout or if it's in the US. That's awesome, right?
That's okay. That's what you're looking for.
Yeah, and then the worst, really, actually, there hasn't been a case like that. I mean, it's funny because some of the guys that do come back and like kind of hang out and off, they're usually, I mean, you like everybody, so it's not like you mind too much, but at the same time, most of the time the companies do evolve out of it. So there's never, I can't think of a single case where I've had to say, hey guys, come on, your time's up, please get out. I mean, mind you that we only started having physical space, as I mentioned earlier, since 2010. So a lot of the older companies already had their space anyway. So there hasn't been that kind of situation. Now, maybe a darker side, or maybe kind of the sort of subset of your question was, well, what happens if a company isn't doing well? Well, I mean, there are companies that have, obviously shut down, or they couldn't hit a product market fit, and then they just close shop, and then that's, we'll have a postmortem, and they'll share their thoughts and learnings with the other Seedcamp teams, but it is what it is, and 9 times out of 10 they'll start another startup, and they're just as adamant about getting involved again. So
So you're very clear with them. You're like, here's 50 grand, here's 3 months, that's it. You can't come back for another 50. You can't come back for more time.
The 3 months, I think as I mentioned that number earlier, it's actually, I said our program was slightly different. So I'll just give you kind of a feel for how our program's different. The 3 months is something that is kind of a construct from the industry. People think that 3 months is kind of the thing. 3 months is indicative of like the largest portion of growth. So that's when like a lot of the mentoring, a lot of the advice and all that kind of stuff happens. But it doesn't stop there. It just tends to sort of level off. So we have kind of, think about it as like a rolling university. We have, for the rest of the lifetime of the startup, we offer them to attend any of our monthly sessions. So the equivalent of what they went through on the first 3 months, they can continue to attend over the course of the lifetime of their company. There is no stop date. Okay. What ends up happening is that the more mature the company gets, they tend to send like their VP of sales or whatever. So the founders may not necessarily go anymore, but they'll send their employee who would benefit from the specific session. So there is an evolution there. But the good thing is that sometimes those founders that become more senior come and share their thoughts with the younger companies. So it becomes an evolution. The next milestone is usually around the 6-month mark, when we take our companies on the trip to the United States, which I just came back from. So we'll go to New York, we'll go to Boston, we'll go to San Francisco, we'll go to Silicon Valley, we'll meet with VCs, with corporates, with other startups. And usually at that point, like our startup that has been in the program for about 6 months kind of gets what they need to be doing, kind of understands what they need to do, and then they can really take full advantage of the US trip. Post-US trip, they tend to kind of already grow into the maturity stage, at which point they either continue coming to the sessions that they want to come to, or they send somebody from their team to go to it. Like when we had Eric Ries attend one of our sessions, pretty much everybody, whether they were a 2007 company or a 2012, I think it was, company, just they all came. They wanted to listen to him. So there is no artificial cutoff point. It just happens to be that the most learnings and growth happen within the first 3 months.
But do you physically kick them out of the space at some point? Are you like
usually the new companies say, "Hey guys, I need desk space," okay. But usually they grow out of it before then.
Okay.
So it's because we invest on a quarterly basis. Okay. So basically, by the end of the quarter, which is obviously the companies that were already in there already started having more than 3 or 4 employees, 5 employees, then the space that we have allocated for them tends to be too small anyway, so they move out on their own.
Okay. Gotcha.
I think one team, and if you're listening, you know who you are.
Get out. Get out.
Yeah. But they did get out.
What's been some of your biggest success stories, and then to come out of the program, company-wise? And what have been, you mentioned 109 companies? 104. And how many of those are still going of that 104?
Yeah, good question. So we have, if you really want to get the full breakdown on our website, we have our infographic, and it's broken down. I don't have it fully memorized, so I'm going to basically give you rough numbers. But in terms of sort of the companies that kind of stand out, obviously we've had 2 that I mentioned. I mentioned one of them. One was MobClicks, which we sold to Velti, and one was RealPage, Rent Mine Online, which we sold to RealPage. And I mentioned that Rent Mine Online was kind of like an early form of collaborative consumption. And the story of Ed Spiegel, who's the founder of it, is actually quite a cool story. He was a VC at DFJ and ended up being a founder, and then having the company basically go to the ground, him having to move in and with his mom, and then basically having a slight sort of pivot into a different sector, and then it took off. And so, those are the kinds of stories where, obviously it was a successful exit and it did well for everyone, but the story there is the kind of story that, really inspires a lot of startups. On the flip side, there's companies that, are still sort of operational and are going and are doing really well, that in terms of when people say, well, what's a success? Well, success is that they're serving a need in the marketplace. I was in the Tube the other day, and I there was one company which you might have heard of TransferWise.
Yeah, they were here
Sat,
Yeah.
weeks ago.
sat in that chair.
I'm sitting there in the tube at
Tavet.
Bank Station, and I see, like daylight robbery. There's this poster, and it says TransferWise, don't be a victim of daylight robbery or something like that. And I'm thinking, wow, like a Seedcamp company's advertising on the metro. That's amazing. It's like it's that much value to the end user that it becomes a mass market thing. Like you can't help not be proud of that and be like amazed by that and that progress, right? Another one of them is Farmeron, which is a company that it measures the success by cows in the cloud. It's software as a service for farms, and effectively it allows farmers to track performance of their livestock and how it is that you need to sell livestock based upon whether or not they've been vaccinated or not, weight, etc. So it's a very sort of yield optimization software as a service. And you think, this is the kind of thing that, seems obvious now, but it's this kind of thing that was started by somebody in Croatia that we met when we were at the Slovenia event. Founder is a farmer himself, and built something that was a need for himself. And then now, he's backed by the likes of 500 startups, Soft Tech, Index, and so you're thinking like, wow, this is amazing. This is really changing a whole industry. And so, those are the kinds of companies where you're proud of, and they're going to do well regardless,
Okay. There was an article today in the New York Times International edition called Technology on Thames, and it was talking about the London tech scene. And apparently Mayor Bloomberg recently said that there's going to be more competition coming from London than there is from Silicon Valley when it comes to, the alley in New York. But, everyone keeps talking about the big exit. There's talk now of King.com, filing their IPO in the U.S., potential $1 billion. Carlos, do you think we need a big exit in London, or do you think that whole line of thinking is wrong? Especially from the stage you start. I mean, you start these guys early.
Yeah. So the big exit has two implications. The big exit has one implication, which is the psychological implication, right? We can do it. Like, this is something that has been done. Here's a big one. And obviously there's been big stories that you have in Europe, Skype, et cetera. And you have some that are teeing up to be that way, SoundCloud, for example. I think that the psychological impact of a big success can't be undermined. Like that is clearly there, but it's entirely there for the purposes of inspiring others and being like, hey, this person can do it. Then there's a second one, which is a cultural shift, right? That makes it acceptable. Like once that success happens, it then has a knock-on effect, which makes it acceptable because all of a sudden everyone's chasing after this dream. And then the third one is the unlocking of capital, right? Now that one only happens when there's enough of those that then there's a volume of that. Now they happen kind of in that order, and they don't happen overnight. So even if you have one success, there's still a lag period behind when you're going to have the mindset change. And then there's a lag further when those whose mindsets have been changed, who then have been successful, then pump money back into the ecosystem.
Right.
So there's a knock-on effect there. You can sometimes circumvent that, meaning you can have enough money that is surfacing from other sources that then provide the capital for you to have a multiplicity of sort of medium exits, and which in turn can yield almost the same outcome. Like you could, in theory, call them two equations. Mm-hmm. You can either have the same thing by having something big which has a trickle-down effect, or a series of middle things that pop up and sort of yield an overall lifting of all the boats, so to speak. Each one of those could potentially work fine. I think that having a large exit would be amazing, but I think it would, like a lot of the initiatives that you're seeing in the UK with SEIS tax relief, is enabling for that money to surface up, therefore enabling more startups to exist, and therefore probably having a lot more experienced founders, and that has the knock-on effect of supporting that ecosystem just as fast as having one dude who does it really well, and then has that sort of knock-on effect, which can take 5-6 years to develop.
But how many years do you think we're talking until we get that PayPal effect? Until we get that Facebook effect, where people actually invest those profits, into the next startups?
Yeah. So that's kind of if you look at both paths, one you could potentially take and engineer around the one where you enable money to be unlocked, which is kind of what the UK is doing right now, enabling all this money to be unlocked from different sources, enable a whole bunch of people to be successful. And then if they're successful, even if it's not a huge success, but it's sufficient success, they're going to reinvest it back into the ecosystem in some way, shape, or form. And then you have an overall lifting of everything, right? The alternative is, and your question was a time one, was how long till like you have a huge type thing, like a PayPal type thing. Then you're looking for the gestation period of any one of these massive hits to then have that person redistributed across. And I would say that's like a 5-6 year period. So this one could be engineered maybe within the scope of 1 or 2, 3 years. This one could be potentially not engineered, but you just have to wait for it within 5 years or so. So potentially different outcomes, but numerically they might end up in the same place.
Okay, fair enough. I'm going to go a bit on a personal tip and hit Carlos with a couple of questions. We always ask people that sit here, Carlos, if you could make a phone call to the 20-year-old Carlos Eduardo and give that young man some advice, what would you tell him to do differently?
I love this question.
What would I do different? What was I doing when I was 20? One thing I really loved when I was 20, but being from a Latin American family, was kind of highly discouraged. I really liked design. And like design, I guess now it's UI and UX. And
why was that discouraged?
Well, traditional Latin American family, you're a doctor, lawyer, or engineer. You're not, a designer is not really kind of an option. Okay. And so I think when you look at the impact that design has today on just people's understanding of a product, I feel like, within Seedcamp, I'm really lucky to have other team members who have this as a skill set, and therefore it's useful for the teams to be able to ask different people in the team different opinions. But man, I remember visiting a friend of mine who was an industrial designer and being like, this is so awesome. How do you do this? Like, how do you conceive this? How do you design this? And you see the impact that software design and even just UI changes drastically change the way people interact with their software and the yield that has on conversion and user satisfaction. And I'm like, man, I wish I had done more of that.
You wish you had fostered that design more in yourself.
Yeah.
Okay. All right. That's good. On that
Rebel against my family and been like, I should have studied more design.
On that same note, what's the best advice you've ever received?
The best advice I ever received actually was from a friend of mine. His name is Walter Urbaniak. And he was one of the guys that worked at Bolt, Beranek, and Newman, which were the guys that created DARPANET, the first sort of internet in the US. And he and his colleagues kind of came up with the first protocols and stuff. And one time I remember I was stuck in trying to figure out a problem when we were working together. And he basically made me go through every single little step that a TCP packet goes through to get from one computer to the next. And every time I got stuck, he would kind of make me backtrack and figure out like what the probable things were that led it to the next step. So if I could bridge the gap between two steps. And that sort of way of thinking has been probably the biggest helpful thing for me in terms of advice. It's not like a little statement like, do what you love or anything like that. It was more of like a way of structured thinking that really, really helped in solving a lot of things where you half the time don't even know what the answer is, but provided you can break it down into small chunks, you can almost deal with the chunks themselves rather than feeling completely overwhelmed by the main problem.
So like logically go from A to B, from B to C, from C to D, not make the jump and not make assumptions.
Right.
Okay. That's good advice. We haven't heard that before. Last one is, for the 20-year-old that's listening to this on iTunes or watching us on YouTube, what kind of advice do you give to them, if they want to someday, be funded by Seedcamp or want to be part of this whole ecosystem? What do you tell them at that age?
Yeah. If I look at some of the founders that we have that are very young, they tend to definitely be bold about, they usually, in some cases, self-referencing customers, meaning that there's a pain that they're solving that they have, and therefore they're building something to solve that. But they definitely are not afraid to be self-taught and also to experiment and not necessarily feel like they have to go down a prescribed path. And so if I look at the founders that sort of stick to my head that are young in sort of the Seedcamp family, they're all very much self-taught individuals. Like they've gone out of the structure of the schooling. So don't limit yourself to what you're being given as part of your curriculum at school or whatever. Go and explore all these other things that are out there. and also pursue things that you think are actually, that you have a hunch that are actually a pain for you or for your friends or for whatever. Just come up with something, test it out, learn about how to supplement it, and you'll probably stumble upon something that's meaningful.
Good advice. What did I miss, Bryce?
Oh God.
Did I miss anything?
He's a mysterious man, Carlos. There's just so many things.
Mysterious.
So many things.
This could be like a 2-hour show. There's a lot. We're just basically scratching the surface. One last question then before we go. What's the biggest mistake you see startups making, like across the board? I mean, I know it's very general, but you must see it happen all the time, not to mention the companies you don't invest in. If there's something that you see, what is it?
I think, okay, there's different kinds of mistakes, right? There's recoverable mistakes, and there's mistakes that are unrecoverable. The recoverable ones are like, okay, I spent $100 on AdSense, didn't go anywhere. Okay, well, we only have $100 left. You can sometimes scrape by on another 100, 200, or 300 to fix that kind of mistake. It is a recoverable mistake. The unrecoverable mistakes, and the ones that tend to screw things up catastrophically, are founder-on-founder type mistakes. For example, two people get into an argument. Who's the one that makes the final call? Two founders get into an argument. It sounds like the beginning of some sort of like bar joke, doesn't it? Like two founders get into an argument, but it really is. It's a big problem. It's a big problem because sometimes you don't necessarily know what the roles and responsibilities are between a group of people, especially like a team of 3 or 4, and what to do about it. Fairness in terms of equity distribution, that sort of game that can sometimes play out between people when whether they want more, they want less, and they feel really kind of stressed about it, and whether they're being fairly treated. All that stuff can really break apart a company. If you start having games between founders, it can really, really catastrophically fail a company. So, for example, one of the things that we prepared as part of trying to resolve that in very, very, very early stage companies before they even come to Seedcamp, we created this document called the Founders Collaboration Agreement. It's available for download for free on the internet. And basically, it's kind of like it's not a contract in the sense that it's a shareholders agreement or something that you'd file in a company's house. It's like literally an agreement between founders to say, look, guys, if one of us leaves, this is what we're going to leave with. Is that fair for everyone? Great. This is what we all are going to have. Is that fair for everyone? Great. Anything we work on here is going to be assigned to the company so that nobody walks away with it and creates another startup. Are we all right on that? Okay, we're going to assign all the intellectual property. We cool with that? And if you just tackle those 2, 3, 4 major issues, you tend to just like park that in your mind, and then that's it. You don't have to worry about that anymore. But if you don't, what ends up happening is that somebody's like, well, I'm putting more time than you, and you're not doing as much, and you're not doing what you need to do. You need to leave, and then no, but do I get to keep my 30 or not? And a lot of the most difficult sort of devolutions of companies have been around these sort of founders' issues.
That's good. I always wondered if there was like a document that you could get everyone to sign. Yeah. Like you said, whether it's legal or not, but it gets everyone in the right mind frame. Yeah. Because like everyone's always playing their own scenario in their head. I'm working more than him, or I'm not. And like without communication, people don't know what's going on. And who's to say at the end of the day? And you have no ombudsman, or you've got no like chairman of the board to say stop doing that. So
it's 3-person, 4-person teams. That sort of stuff will kill you.
And you can get that document on Seedcamp?
Yeah, you can just type in Founders Collaboration Agreement.
Okay.
It's funny because you put it up there, and then obviously people are going to be like, well, this document isn't legally binding, blah, blah, blah. I'm like, look, guys, it's a conversation starter. If you want to sign it and you want to use it as a template for you guys to then go back to, fine. If you want to amend it, go amend it. We've open sourced it. It's Creative Commons. Feel free to download it and edit as you wish. Mm-hmm. If you have a friend who's a lawyer who wants to take a look at it, make some amendments, go ahead. So we just made it available there, but I think it's not meant to be like this monolithic thing that you have to follow directly. It is a suggestion that encompasses the major things that I've seen be a problem for the community.
That's a good tip for the listeners.
Yeah, I like that. Download that file, definitely. Carlos, how do people get in touch with you? Do you have a Seedcamp event coming up where people can attend? What's the info?
Yeah, no, if people want to get in touch with me, I'm at CEE on Twitter.
When did you get that Twitter handle?
When did I get that Twitter handle?
5 years ago or something?
That was one of the first ones, I guess. CEE. And we have Vienna coming up. We have Helsinki coming up. We have Seedcamp a week Berlin coming up. So if you want to come, Helsinki is probably the next one that you should attend or apply for. And then, we hope to have some great news coming out of Vienna and Berlin, which are the next 2 events that are going to be coming up.
Are you there? Is that happening as part of Pioneers Festival?
Yes.
Cool. So I will be there. I will be in Vienna at Pioneers Festival. I shall keep my eyes peeled.
Awesome. Well, contact Carlos if you want to get involved in fun with seeds. And Bryce, what's going on with Beards and you next month or so?
Yeah, so all sorts of bits and bobs. We've got some exciting announcements to make very soon, which I can't reveal, but there are some
Can't break any news here.
There are some new things coming. We're going after ever broader horizons. But I'm going to be at Pioneers Festival next week in Vienna at the Royal Palace, which should be great. Hearing all about future technology and startup. Carlos will be there with Seedcamp, or Philip, I think, from Seedcamp is going to be there. There's going to be all sorts of wonderful things going on there, including apparently NASA going to be speaking, which will be quite interesting. And then I am back, and then I'm off again in November. I'll have some more news on that soon.
Okay, good. But there'll still be weekly drink bouts Fridays, right?
Every Friday. I'll be there this Friday at Silicon Drink. I don't know where we are this week, actually. I should know that.
Check the web, definitely.
Check the web. It's silicondrinkabout.com/London.
Cool. If you enjoyed this show, please tell your friends and coworkers about it. Share it. If you're listening to us on iTunes, come check our beautiful faces out on YouTube. Everyone included today. It's episode 18. It's been lots of fun, Bryce. We're going to keep going. We got another 4 weeks booked. Yep. It's about the people, as we say. I'm learning. See, I'm getting better, right?
You're getting there.
When it started off, when Bryce was here on London Real, I said, "What's a mushy monster?" That's what I said.
We still got to get Michael in.
That was 5 months ago.
He's on the agenda.
So Michael and Saul have both been called out here today. So hopefully we'll see them soon. Gentlemen, thanks for being here. Fantastic discussion. We could talk to you more for like an hour, but we'll cut it off here. And thanks, guys. It's about the people, and best of luck.
Thank you.
All right, thanks. Take care.
I potentially failed to do in my situation was really sit down and hash out what is our vision, what are our different roles, kind of what's expected from each person. And I think those are things that can make or break a company or a project.
That's good advice. We haven't heard that one before.
Absolutely, yeah.
Definitely.
Yeah, the co-founder stuff is cool. And you even see it, the Twitter co-founders had in the early days, and a lot of people think or are saying BlackBerry.